Good afternoon, everyone. I'm going to wait a few moments to let everybody assemble in the room. We'll get started momentarily. Well, good afternoon. My timer. Good afternoon, everyone. I'm Eric Ellman with the Consumer Data Industry Association. Thank you all for joining us today. After 3 years, the pandemic-induced student loan moratorium is set to expire at the end of June next year, 2023. While payments resume, the Biden administration's historic student forgiveness program, Fresh Start, will kick in and provide relief for millions of borrowers across the United States. Yet for American consumers, there's still a significant amount of uncertainty around how these challenges will impact the student loan landscape in 2023 and beyond. Today, we are going to dive into these issues with an amazing panel of experts. I'm really excited to have them here, sharing insights about everything from the recent evolution, I should say, of student loan policy, how consumers should prepare their finances ahead of the payment resumption, and what proposed or planned changes to the US student loan system we can expect looking forward. I, of course, as I said before, I'm Eric Ellman with the Consumer Data Industry Association. I'm the Senior Vice President for Public Policy and Legal Affairs. And student loan debt has been closely watched in the United States, as well as, of course, here on behalf of the consumer reporting community at CDIA, especially, of course, in the last couple of years and in the last year or two in particular, when we've worked closely at CDIA with our colleagues in the U.S. Department of Education on the credit reporting and credit scoring impacts of President Biden's Fresh Start program. This is all especially important to me personally because I have a high school senior and I'm busy right now filling out all of the financial aid forms and celebrating with my daughter as the acceptances come in, and thankfully there's been more acceptances than rejections. So we're going to be talking about some of these things today. This, of course, is an issue that's important for all of us, of course, for me as well, personally, like I just mentioned. And I am joined by today 3 very exciting, very expert people who will help us guide us through the discussion. First is Claire Ballentine, who is a personal finance reporter with Bloomberg. Claire is a reporter with Bloomberg News, where she covers personal finance and wealth trends. Some main areas of focus include the impact of student loans and potential forgiveness plans, as well as how young people can best manage their finances. Claire previously covered the stock market for Bloomberg and has worked in the New York Times and the Raleigh News Observer. And Raleigh is important because my daughter is hoping to become a member of the Wolfpack at NC State, which is hopefully that will come through. Also joined by Regan Fitzgerald, who is a manager, student borrower success project at the Pew Charitable Trusts. Regan focuses on improving the student loan repayment system, particularly for borrowers who are most at risk to default and delinquency. She previously worked in Pew's Government Relations Department. Before that, Regan was the Director of Government Affairs for Adams & Associates, which provides workforce training for disadvantaged youth. She also worked in the U.S. Senate as a legislative counsel, legislative associate, and fellow. She's worked on education, labor, and workforce development issues. She has a bachelor's from Bryn Mawr College and a JD from American University, which is great because I also went to American University. So we know she's smart. And next, of course, last but not least, is Chris Quintana, who is the Education Enterprise Reporter at USA Today. Chris is an education enterprise reporter, like I mentioned. He covers stories about how students decide if and when and where they go to college, how they do or do not pay for their education. Chris has worked closely covering President Biden's student loan forgiveness proposals and the pandemic-induced student loan payment pause. Chris previously worked as a reporter for the Chronicle of Higher Education and holds a bachelor's degree in creative writing and journalism from the University of New Mexico. Welcome, Chris. Welcome, Claire. Welcome, Regan. So let's start the discussion if we could. You have, as you've seen in your respective areas of focus around student loans, how has the student loan landscape both in terms of policy and borrower experience, evolved in the last few years? And anyone who wants to dive in, have at it.
I'm happy to take a stab at starting this off there. So I've been covering student loans in some variety for the last 5 or 6 or maybe even 7 years, depending on how far back you want to go. And I think the thing that stands out most to me is just how present the conversation is in the mainstream dialogue now. Like even 10 years ago, the idea of talking about widespread student loan forgiveness would be really hard for people to fathom that we've reached this point. There are other developments too that people used to talk about as being very far off, like the addition of or the department of or the federal government's changing stance on forgiving debt through bankruptcy, right? Going from a stance of fighting it and to now even maybe recommending it in some cases. So I'm really just been fascinated by the crossover into the mainstream consciousness.
Great, thank you. Anyone else want to take a stab at that?
Yeah, so I would agree with that. I think that it's there's been a lot more awareness of both the concept of student loan forgiveness and sort of what student loan borrowers face. I think especially as more people have graduated college and had student loans, it's really affected the millennial generation a lot. And you see that reflected in their financial situations and their ability to buy homes and reach other life milestones. So I think we've seen that evolve within, just the past couple of years with the pandemic. I think the main theme has been that it's such a roller coaster for these borrowers. It's like they have been told they'll have to start repaying at one date, and it's gotten constantly extended. So, I think that conversation went a lot from this relief when the pandemic first started, knowing you wouldn't have to pay student loans each month, to then just sort of confusion, exasperation, frustration over what is the plan here and what's going to happen.
Great, thank you. Regan, did you have anything that you wanted to add?
Yeah, absolutely. I think that, there's also been a lot of policy change over the course of the pandemic. And there's a good reason for that. In March 2020, of the 43 million student loan borrowers, about a fifth of them are in default on their loans. And it really showed the need for reform, and the pause gave the administration, two administrations, a chance for that reform. So there have been significant changes and proposed changes in repayment since then. So over the course of the pause, obviously there's been this issue of loan forgiveness, but also there's been the transfer of millions of accounts between servicers, new administrative rules for targeted forgiveness programs, and the near elimination of interest capitalization on student loans, the rollout of the Fresh Start program to put defaulted borrowers back in good standing with their loans, the ongoing procurement for a new loan servicing program platform, the proposed new income-based repayment plan that will hopefully be implemented in concert with data sharing between the Department of Education and the IRS to ease enrollment in these IDR plans. And it's really critical that the Department of Education has these reforms ready for the restart of repayment and communicates clearly and effectively with borrowers about how they can successfully navigate the restart of repayment.
Thank you for that. Let me just pick up on a theme, Claire and Regan, that you had both just mentioned. There's been a lot of changes in the last couple of years and even in the last couple of months. And, you mentioned programs and then moratoria being stopped and started and continued and extended. Do you get a sense that there's a lot of confusion in the consumer marketplace, and students, borrowers, and their parents maybe have a hard time keeping up? Chris, you're nodding as well, so feel free. Any of you want to dive in, have at it.
Yeah, I mean, I think absolutely. It's, for me personally, I cover this stuff for my job and I have a hard time keeping up. I mean, it's constantly shifting sort of news. And I think one thing that we often forget as journalists or as people in the industry is that a lot of everyday Americans aren't looking at the news every day. They aren't looking at their Twitter feeds constantly and seeing all of these changes. So I think that's, and even for the people who are keeping up to date with it, they're getting mixed messages in terms of emails from their loan servicer versus, the government's forgiveness program. So I don't think you can understate just how confusing and chaotic it's been for borrowers right now.
Yeah,
Great, thank you.
and just
Chris,
to add
please.
to that, oh, sorry, Eric. Just to add to that point, borrowers are receiving contradictory information from the government at times. It's like borrowers were told that this initial payment pause heading, that was scheduled for the end of the year would be final, right? And because of circumstances, with the legal suits and kind of the development of these cases through the Supreme Court, that's not going to happen, right? And that's fine, and it happens, but for borrowers who are told that this is the end, that this one is the end, for it to be extended again does sort of just create this sense of like, well, what's really going to happen, right? And borrowers are also being told that, from the federal government, well, we've approved your debt forgiveness, but it's contingent on, courts agreeing with us that this plan is legal and will go through, right? So I think it's also challenging for borrowers when they're told that, you've made payments and you can request a refund for those payments that you made during the COVID pause, right? I think that is helpful, certainly if the borrowers need that money back, but if they paid it with the expectation that they're going to get $10,000 or $20,000 in debt forgiveness, I think that's kind of a precarious situation for folks if they're acting as though that money has already materialized. And beneath all this confusion, I would just say, I wouldn't spend that money until you've seen it cleared on your accounts, because there's still a ways to go.
So obviously, you're all great sources of information for the student debtor community, the student loan community. Do you have any recommended places or sources that student borrowers can go to try to keep up on what is and what is not happening with all of these programs and plans and stops and starts and all of that?
Well, it's really important that borrowers make sure that their contact information with studentaid.gov is updated, that they go and log in and make sure that they have their current address and email address so that they get the latest information from the federal government. And also, if they, for the end of the pause, if they had previously been on auto debit, that is not something that will automatically kick back in. They need to re-up that with their servicer. So if you have previously had your payments automatically taken out of your banking account, you cannot expect that to automatically happen again. So so you don't miss another payment, you need to go back to your servicer and sign back up again for that.
Got it. So what are some of the bigger challenges facing borrowers heading into the end of this moratorium, and how should borrowers prepare for that? Any one of you, and that's for any one of you that wants to jump in.
Yeah, so I think one of the big challenges as this payment moratorium ends is the economic environment in which it's happening. When this all initially began, it was during the pandemic. Things were not great then. A lot of people had lost their jobs, were having a really hard time. Flash forward to now, and in some ways things are better. The job market is a lot stronger. In some ways, we're seeing inflation really still elevated. People are having a hard time affording everyday items. Rent prices, mortgage rates are really making it a hard time in terms of lodging costs. And then on top of all of that, we're seeing these monthly payments return. So it's definitely going to be a lot more difficult for people, depending on circumstances. A lot of people paid down other debt during this pause, so they've been able to get in a better position. But for a lot of people, especially those living paycheck to paycheck, adding on these expenses again is going to be a huge burden on top of what they're already facing.
Yeah. To build on what Claire said, we've had a few surveys out in the field of borrowers during the pandemic. And in a summer 2021 survey, It found that 59% of borrowers not making payments during the pause believe that most of the money that would have gone towards their student loan payments was spent on needed expenses, and 27% said that the money mostly went towards paying down other debt, such as credit card debt, medical debt, or auto loans.
Got it.
And that corresponds with,
Please.
USA Today. I and some other reporters have talked with borrowers just about how they've been spending their money during the moratorium pause, and it is paying off credit card debts. It is, funneling money towards like building a house or just kind of like keeping food on the table for some folks. And there is a contingent of people who saw the moratorium, saw the 0% interest rate, and decided that this is an opportunity to start paying this debt down. I talked with a young woman named Hannah Purnell who lived in a basement with like a multi-generational family and was making, multi-$100 or I think it was between like $2,000 to $3,000 worth of payments every month to kind of, knock down this debt a little bit. And so that is an option that is available to some people. I think the concern there is, just handing the government your money when you could be holding on to it and it could be generating interest, right? So I've heard from a lot of people in the, borrower repayment space that a potential avenue for folks who are looking to take advantage of this 0% interest rate is to be saving the money and put it in, a savings account or something else that generates interest. And then you can make that lump sum payment before the payment pause itself ends. And, there is a little bit of squishiness on when that actually will happen. So, June is the end of June is forecasted as the end of it, but the administration had indicated that it's the end of litigation associated with the forgiveness plans itself. So, I will be writing about that extensively. I'm sure that other folks in the student loan space will be too, but just something else that they should keep in mind. It could be a little bit sooner, maybe not a whole lot, but yeah, just something to keep in mind.
Chris, I'm glad you mentioned what you just did a moment ago, because I know that on behalf of our colleagues and the members of our trade association in the credit bureau space, in the consumer reporting space, we strongly encourage consumers to keep a close eye on their debt and their debt load. And those are those are things that are important now and in the future, of course. And one of the things that we remind consumers to do, and I suspect Chris and Claire, maybe you do this in your writing as well, is to encourage consumers to check their credit reports regularly, and which, of course, I think we probably all know consumers can do at annualcreditreport.com. And there's also mail and phone numbers for people to take advantage of that as well. But I suspect Chris and Claire, you both agree that that's something that consumers should keep a close eye on their overall debt load and just regularly checking their credit reports, right? I'll take that. I'll take that as a yes.
Yes,
It looks like you're both nodding.
Yeah.
Okay.
Well, I would say too, as a part of that, and speaking to a point Regan made earlier, if you haven't logged into your federal student aid service, that account recently, it's really easy to find out how much you actually have in student debt and kind of what the interest rate is on those particular loans when those payments do restart, right? And so I recognize that some folks are probably aware of that, but it is something that, when I was a younger borrower, I wasn't aware that it lived there, and I just kind of went through my servicer only. And if you do want to be aware of the information that is coming out, to Reagan's point earlier, that is a really good avenue for you.
Well, and especially right now, thinking about payments coming back, if you can, either think about what you were paying before the pause or kind of estimate what you're going to be paying when it restarts, that can really allow you to formulate a budget and to calculate that into your expenses. Maybe your lease is up this summer and you might move somewhere else or have a different amount you're paying in rent. You should factor that into everything, and so you can sort of get those monthly expenses in order even before payments restart.
Sorry, Regan, please go ahead.
Sorry. And if you've had other changes in your economic situation and are interested in perhaps having a lower payment, you can look at options around an income-driven repayment plan for when you restart repayment. And it's actually easier to enroll in those plans now under rules that the department has rolled out. You can do attestations instead of having to do longer ways to improve your income and family size. So this might be a time to take advantage of that, as well as we're waiting for the new IDR rule from the administration.
Great, thank you. And Chris, again, going back to a comment that you made a moment ago, that's good advice for me as a very near-term student loan borrower on behalf of my daughter to check that information pretty regularly as well. I was actually pleasantly surprised by how relatively easy it was to fill out the online financial aid applications. I was expecting, an hour or two of frustration and pulling my hair out or whatever, but it was a lot easier than I thought it would be. So I was grateful for that. And of course, speaking of checking, I mentioned a moment ago, of course, that consumers can check their credit reports regularly at annualcreditreport.com, and consumers can do that for free as a service that the credit bureaus have provided, extending through the end of next year, 2023. Let me pivot to another question here. So when it comes to building an equitable financial landscape, and there's been a lot of very important and very necessary conversations in the last few years about how to create a more equitable education system, how to create a more equitable financial services system, to reverse essentially centuries of inequities for a number of people here in the US. What role does student forgiveness play in that education equity, in that financial equity? And anyone who wants to dive in for answering that, have at it.
Well, I will say, when you look at the data, we do know that borrowers, particularly Black borrowers and other non-white borrowers, tend to carry more student debt than their white counterparts, right? So there is an argument among the borrower forgiveness advocates that this is a form of racial, it's a way to get at kind of adjusting things and easing burdens for folks who traditionally have been expected to carry more, right? So there is an avenue that of thinking that goes along those lines.
Yeah, and just looking at some of the statistics, the average student loan balance right now is about $37,500. But even beyond that, Black college graduates owe more in student loan debt than other racial groups. Their average is more like $52,000. And 4 years after graduation, about half owe an average of 12.5% more than they borrowed. So, it's directly an issue that affects people of color more. So both in terms of student loan forgiveness, in terms of, helping people move on with their lives, that's really crucial to help set people up for success, whether that's, buying homes, providing for their families, it's directly shown that people of color do have more student loan debt. So these efforts to do forgiveness, it does help create a more equitable financial landscape. For many millennials, student loans and the debt burden of that is sort of, the basis of everything. How do you achieve other financial goals with this debt hanging over you? So in order to, increase home ownership, help people build wealth, I mean, this is the very first step, is getting rid of this student loan debt, whether that's through forgiveness or income-driven repayment plans or other ways to help people. I mean, that's sort of the basis of it all.
Got it. So that's maybe a good segue to my next question, and it goes back to something I mentioned we discussed just a few minutes ago, that there's a lot of confusion in the marketplace about what's happening or what's not happening. So there's a Fresh Start program. There's a lot of litigation going on. Can one of you help us better understand what student forgiveness programs are in place or what are not in place, what are on hold because of litigation? Any of you want to take a run at that?
I'm happy to talk about kind of where things stand with the president's plan for widespread forgiveness, right? So yeah, that is the sort of marquee program, I would say, that a lot of people associate with the student loan forgiveness movement at this point. That's $10,000 for individuals who make $125,000 annually or less, and that's $2,500. Higher, obviously, for couples and folks in that space. The president announced that in August, and it has since been challenged by a variety of folks in the courts. The most prominent case there initially was brought by 6 conservative states, and it's under the name Nebraska v. Biden. And so that was, you know, there are a lot of points that were made in there, but I think primarily it boils down to questions of, you know, do the states have legal standing to bring this case and to even say that they're being financially harmed into the future by the debt forgiveness program, right? The other big question that the Supreme Court will be wrangling with is just, does the Secretary of Education and the federal government have the authority to cancel student debt through executive action? And then specifically, you know, through this 2003 law that allows, that said, you know, that the federal government says allows them to waive federal student loan payments during times of national emergencies, the national emergency here being the pandemic. You did ask about other loan forgiveness programs. So folks may have seen that, you know, students who had attended ITT Tech, for example, had their federal student debt wiped, right? And so that is something that has been ongoing that also applied to Corinthian colleges, although students, you know, some borrowers have spoken to me about saying that debt was, I'm so sorry, saying that debt was promised to them, but they hadn't yet seen it reflected in their balances. I would say that the other big effort from the education department has been its revamp of the public gosh, I say this all the time, but I think of it as PSLF, Public Service Loan Forgiveness, right? And so that was a program that was really hard to access. You know, hundreds of thousands of people applied for it with the idea that if you work in the public sector for 10 years and make payments, that your debt, whatever remaining debt you had, would be forgiven at the end of it. In practice, that hadn't worked. It hadn't worked out all that well. The Biden administration has said that by the time they took office, only a few thousand folks had ever received forgiveness through that program. Since redoing it, you know, we're seeing tens of thousands of people who've gotten forgiveness through the PSLF, and so that's something I'm keeping an eye on moving in the future. This applies obviously to public sector employees, so people working in the government and nonprofits as well. And sorry to go on there, just
that's really helpful.
And Eric, you sorry to interrupt. You mentioned Fresh Start as well. Fresh Start is a program for defaulted borrowers, which will bring them back into good standing on their loans. And it's currently being rolled out by the Department of Education. It's a program that defaulted borrowers will have to opt into, and they will have to opt into that. They have up to a year after the end of the pause to opt into that program. And so that would actually wipe, once they opt into it, that will wipe the delinquency and the default off of their credit report. So it is a really advantageous program for defaulted borrowers to get their credit back into good standing, get their loans back into good standing, to get into a payment plan that works for them, instead of some of the really onerous repayments that they have to go to, including forced withholding from their wages, wage garnishment, tax withholding, things like that. One thing that we do have to keep an eye on around Fresh Start is that our research has shown that about 2/3 of borrowers who default more than once. And so it really is important that the department provides support for these borrowers to make sure that they can get into a repayment plan that works for them and stay in that plan and stay in good standing.
Now, that program that you just mentioned, Regan, a moment ago, and others like it are not without controversy, right? Because there are people who feel like they've paid their debts. Why should other people get their debts forgiven while others who have paid their debts have had to take that out of their wallets, essentially, right?
Well, Fresh Start is a program where borrowers will still have to pay. They'll still have to repay their loans. They'll just not have to go through, tax garnish, wage garnishment, tax withholding, things like that, and they can get into a repayment plan. So it's just sort of making sure that you're on, you're basically back at square one with your loans. And instead of being once again going into default, and really having some of the really onerous penalties that go with default right from the beginning at the end of the pause. So it really is a fresh start for defaulted borrowers.
Got it.
Eric, if I could add on to that
Yeah,
point,
please, Chris.
just to, regarding the pushback against the loan forgiveness program broadly, right? I have heard from a lot of folks about the sort of sense of frustration that college graduates who the research indicates do have higher earnings than folks who don't have a college degree, right? And so I wrote a story earlier this year that talked with folks in unions and kind of other labor fields who didn't have degrees, just about how and why they feel about this sort of wider student loan debt forgiveness program. And it was surprising to me. It wasn't monolithic. Like, certainly there were folks who were like, no, I went into the trades. I worked really hard to, avoid taking on debt. I joined the military because I didn't want to take on debt. Like, I really strove to not take on this like burden, and now that I'm being asked to take on this debt for folks who supposedly have higher earnings, right? But from other folks, there was the sense that like they have a debt and they can't pay it back, and it's really frustrating. And there wouldn't begrudge anyone who is like struggling with a financial obligation, especially if it wasn't clear that the bachelor's degree or whatever certificate or associate's degree or whatever credential they had tied to that debt didn't lead to like the higher earnings, right? And in all of that too, there is like a frustration, I think, like of sort of an antagonism, or not antagonism, but like pushback against the sort of elitism that may come with in some sectors of folks who have college degrees, right? And kind of the idea that our main mode, or that so many young people are being guided into college, saying that this is the avenue, this is the way to do it. And then we saddled them with debt, and then it's not clear that their earnings always follow, right? So I think there was a lot of, it's not just frustration with like forgiving the debt, it's frustration with the way that our systems are set up, and not considering alternatives to a college education because it feels like it would be, outside of like the class expectations to do so.
Well, and then the other big argument right now as well, I mean, I have definitely heard that one a lot. I think more and more from maybe even academics, you hear about how forgiveness could contribute to inflation, which is sort of an ongoing question. But I think that is something that a lot of academics have sort of globbed onto. Whether or not that's actually the case is very much up to debate. We have seen that inflation has likely already peaked by now. How long it stays elevated is another question, but more and more, I hear that argument as well. And I think the strength of that argument and the force behind it changes with how the economic conditions change, but that's also a big factor in play right now.
Great, thank you for that. And you heard it here first. Claire Ballentine says that inflation has peaked, so you can take that to the bank. A few years ago, I was in a meeting at the Federal Reserve Board, and we got to see the big table where the Open Market Committee sits, and there's a little, and underneath every board member's desk is a little button to push. And I thought that you push it once to raise interest rates and you push it twice to lower interest rates, but it was actually, I think, maybe just to order lunch or to bring over an aide or somebody like that. You spoke, several of you had spoken about debt forgiveness, and we have a question here from the Q&A box that I want to ask, and feel free, any of you, to answer. I've heard that some borrowers have already received their forgiveness. Can this be confirmed? If this is true, what will happen to those borrowers if forgiveness is reversed?
So I'm happy to take a stab at that, and anyone please correct me on the back end here. So people are receiving student loan debt forgiveness through some of those programs I had mentioned earlier. Again, borrowers who attended institutions like IT Tech or Corinthians College, or in the public service loan forgiveness program. So you may be hearing about forgiveness there. There were also, there was a snafu with one of the servicers where they had erroneously sent borrowers a notification that their debts had been cleared. And they are in the process of trying to fix that, I understand. So, but to say, the wider debt forgiveness plan hasn't moved forward yet. And so if we are, I'm not entirely sure if that is getting to the heart of the question, but I'm just trying to answer kind of what may be around it. And another piece, like maybe something else that is also going on there is I mentioned this a little bit earlier, but borrowers had received notices from the education department saying, you filed your application, it has been approved, and just as soon as we get through this legal issues, then that your debt will be cleared, right? Or your 10,000 or your 20,000 will be administered. So I think that's potentially what may be happening. If that is reversed, I think it'll be on the education department to let borrowers know that it's not coming.
Well, and the other thing that it could very well be is a provision of the CARES Act said that if you make payments during the pandemic, so let's say student loans were paused, but you kept making payments from March 2020 until now, you can request a refund of that money. And so some borrowers who had paid down their balances below 10,000 had requested to get that money back. So that's money they'd already paid that then is being refunded to them. So people are getting checks in the mail, up to maybe $10,000 or more, but that's something that it is money they already paid that is then coming back to them under the assumption that their loans are being forgiven by 10,000. So that being said, if the forgiveness plan falls through, they could be on the hook to repay that money. We don't know yet because things are sort of in limbo, but that's also one thing that it could be.
Great. Thank you. Let me continue on the theme that we've been talking about, equity, and also maybe bring in a discussion about access and accessibility, I guess. Higher education is a proven tool for financial empowerment, which is why it's critical that our system supports low and middle income consumers. How can the student loan repayment system evolve to make the barrier for entry more accessible to these groups of Americans, again, low middle income American consumers?
That's a good question. And I think it gets at something that we're, a lot of people in the higher ed reporting sector are trying to get at as well. It's just kind of this question of who should be responsible for the cost of a college education, right? I mean, if we are talking about reducing debt loads, that kind of suggests to me that maybe it's not the individual that we're talking about, or maybe it should be more on the states or the federal government to provide more upfront funding to prevent students from having to borrow so much money to attend college in the first place, right? So that's a potential option that some folks are talking about. But as far as like repayment on student loans more directly goes, I mean, I'm very curious about what's going to happen with the Biden administration's new IDR plan, right? They're talking about lowering the rates of what borrowers are expected to pay, and so that could be interesting. I guess I am concerned about.
Let me interrupt for one quick second. For those of us who don't know IDR, it's income-driven repayment.
Oh, thank you. Yeah, my brain is a little rotted with all the acronyms from the education department, but yeah.
It's the hazard of being inside the Beltway.
So, I think the challenge with these income-driven repayment plans, though, is, it certainly does lower your payment, right? But it does extend the window that you're paying on these loans, right? So I think borrowers have to make that decision for themselves. Is the lower payment worth it? And is it going to be worth it for paying on the next 20 or 25 years? And granted, circumstances change and they don't have to, pay in 25 years. But I just like to add that information so it's not seen as a complete like silver bullet to answer to the question, I guess.
Got it.
Yeah, and I think one of the advantages of the plan that the Biden administration has put forward so far, we haven't seen all of the details, is that there are pieces beyond just bringing the affordability piece on this plan. One piece is that borrowers who have under $12,000 in debt can achieve forgiveness in 10 years. Another is that balance growth, which our research has shown is a really big problem in keeping borrowers in IDR plans. Balance growth basically is if you're borrowers in IDR plans, which is income-driven repayment. So your payment is based on your income and your family size. So you can pay as little as $0 a month. But if you are paying $0 a month, your interest is added to the amount of your loan. So you see your loan amount going up and up in your balance. So often that is an impediment to borrowers, and they see that, even though you might achieve forgiveness after 20 or 25 years, often borrowers are intimidated by their balance growth. And under the proposed plan of the Biden administration, there would be no interest accumulation. There would be that is a huge advantage. There would be no balance growth. So I think that that there are some really big advantages of what we've seen proposed from this new plan that will really help borrowers. And IDR plans have been proven to be to help prevent default on student loans for borrowers, especially for low-income borrowers who are the most susceptible to defaulting on their student loans. And that would be a huge advantage in the long term looking forward on student loan policy and student loan repayment policy.
Well, and then one thing that I hear a lot in terms of the whole picture of this is that, both from financial advisors and from people in the student loan industry, is that, this forgiveness is a Band-Aid on the problem. The problem is the soaring cost of college tuition, which I'm sure everyone knows from their own experiences, from their kids, from their parents. I mean, it's undeniable that, the rate of increases in college tuition is far outpaced inflation, wage gains, any other measure like that. So, and that's a very complicated issue, how reductions in that or slowing the pace of growth would even happen. But I think that is sort of the key issue with all this, just how expensive it is to attend college.
Which is why I told my daughter, by the way, that she could go to any college she wants that has the word state in it. First, I told her we live in Maryland, and I told her first that she could only go to a school that has a terrapin as a mascot. But find a terrapin and you could go any school on earth. Chris, I want to come to you in just a second on reducing costs, but first I wanted to maybe make a comment about the work, some of the work that we do in the credit reporting community on behalf of our consumer reporting agency members. Obviously, there's all kinds of different student loan programs and plans, and they change sometimes rapidly. And sometimes keeping up with that pace is very difficult. But we, our consumer reporting agency members, others here in the consumer reporting industry have been working closely over the many years, in particular in the last couple, with the Department of Education and with federal student aid to try to keep pace, well, not to try, to actually keep pace with all of the changes. So obviously, how this information gets reported to the credit bureaus is very important to us, and we work very closely and very hard to make sure that every time that there's a change in the student borrowing system, then we make the requisite changes in the credit bureaus to make sure that it shows up accurately and reliably in the credit reporting system to benefit consumers. So, Chris, you wanted to jump in about reducing costs, so have at it, please.
Yeah, and I'm responding to a question here from Thomas Jensen, and
yeah,
I think that is, and to speaking to Claire's good point that just earlier, a lot of folks are saying that the forgiveness, this mass forgiveness, hundreds of billions of dollars, is a Band-Aid on kind of the issue that is affecting all of us, which is the cost of education is continuing to rise. And some states are looking at reducing that. A lot of states have some form of college promise programs now, especially for their in-state students. I'm from New Mexico, so I'm a little bit of an unbearable homer about this, but the state of New Mexico just recently unveiled a pretty expansive free college program that covers costs for even students who are part-time, right, and folks who are wanting to return to school. So that is interesting to me. The challenge with that, obviously, is, it depends on where you live. If you're in a state that wants to subsidize higher education, that's great. If you're not, you're somewhat reliant on the federal government through the form of Pell Grants and federal lending, right? And so, obviously, there's also the option to try and attend a well-resourced private university. There are a handful of institutions that offer no loan programs. The challenge there, I think, is just space, right? And space and access. And these are great. And wonderful programs to the folks who can get in, right? And so when you're looking at like a Ivy League institution, we're talking about maybe around 2,000 spots in the undergraduate class. And so I don't know that that answers the question of college affordability more nationally, right? So I am curious kind of what the administration will do kind of moving forward. President Biden has talked about doubling the Pell Grant by 2029, which would certainly, essentially make community college free for a lot of folks and reduce the cost for folks in four-year state schools and other institutions. But yeah, I think to Claire's point again, we haven't seen as much conversation on reducing that front end cost for borrowers and their families, or sorry, students and their families who become borrowers later. Yeah.
Great. Thank you very much. Let me ask another question, which I think is a good segue from the one that we just discussed, which is what changes in the student loan system in the US would have the biggest positive impact or impacts on borrowers? And maybe the subtitle of that question is, if you had a magic wand, how would you use it? Regan, do you want to jump in first?
Sure. I mean, obviously, the affordability issues are incredibly important, and things that definitely need to be addressed in order to look at this issue holistically, and to really get at the problems that students and borrowers themselves face. At Pew, our current research is really focused around repayment, and especially those who struggle to repay and who default. And for those borrowers, there are basically three issues that we're looking to address. So first, there's reforming income-driven repayment. So creating one plan that's affordable, especially for low-income borrowers, that limits balance growth, and that is easy to enroll in and stay in, and that's the key. So second, the Department of Education needs to follow through on reform of the servicing system. This is to ensure that borrowers receive accurate and up-to-date information when they contact their servicers. Pew has recommended the sharing of customer best practices between servicers and creating a common servicer manual, as well as incentivizing targeted, effective outreach to borrowers who are at risk of delinquency and default. And then third is the reform of default. So as I think I mentioned, 20% of student loan borrowers were in default at the beginning of the loan pause. Black and Hispanic borrowers are more likely to default than white borrowers, and those who default are often experiencing other forms of financial insecurity. And as I mentioned before, 2/3 of borrowers who default more than once. So defaulted borrowers can face severe consequences, including wage garnishment, offsets of tax refunds, Social Security payments, and harm to their credit score. Default and getting out of default is complicated and confusing to borrowers. So we hope that Ed will take advantage of the time that they have now to make these needed reforms.
Great, thank you. Chris or Claire, did you have anything you wanted to add?
I'm not going to say that I have a magic solution necessarily, but what I do hear from borrowers is just the complexity of paying back their student loans. Like I remember very distinctly, I've talked with folks who say, the money itself is not like necessarily the most challenging part, although I recognize for many people it is. But for some folks who are like in public service loan forgiveness, right? Like the challenge of trying to certify past employment and kind of figuring out which income payment plan they're supposed to be on to qualify for this program are incredibly vexing, and it's not clear to them how or when or why these things are happening. So I think making it simpler for borrowers to pay things back would go really far. And I think, the simplification of income-driven repayment plans would go really far too, because there were Reagan, like four of them now, and there would be a fifth one with this new one. And it's just like, if you're a borrower and you're trying to figure out like, which of these things do I do, right? Like it's a challenge. I think too, there's been some conversations around changing the way and when borrowers are expected to repay their debt. Like if the things were available on like a pre-tax basis or something, or if it was like a straight percentage of earnings capped at between like 1 or 3% rather than some amount tied to income, right? Like, so I think that I'm curious kind of where, if alternatives to sort of the established methods of repayment will start to emerge in the years to come.
Claire, did you have anything that you wanted to add?
Yeah, I totally agree with all of that. I think those are really good. The only other thing that I would add is I have heard this idea floated around. I don't think it's really gained traction, but some people have proposed setting the interest rate for student loans at 0. For a lot of people, the interest is really the killer. I mean, it's what takes so long to claw their way back from this. You know, the political ramifications, other ramifications, you know, haven't truly been that well considered, but it's just one idea that, you know, made me think, that could possibly be a way to go.
Well, and it is somewhat optimistic. You know, Reagan mentioned this earlier, but like the federal government's removal of interest capitalization in most cases, I think will go really far for a lot of folks. And it's also just kind of baffling too, as like an 18-year-old to think that like you're told that like, well, here is your loan, and here's the amount that you will be expected to pay back. But by the time you actually graduate, it's actually much higher. And now you're being charged on a completely different rate than what you thought you were signing up for, right? And sorry, if I could just add, like, as far as like things that we could be doing more, I mean, I think like, I don't think financial literacy is a panacea, but I think like expecting 18-year-olds to know fully what they're getting into for the course of their lives, I think there could be more done in that space. And folks tell me all the time, you know, I know that I signed the dotted line, but I was 18 and like I didn't know, you know, like I didn't know what it would mean.
You know, we could spend another hour just talking about financial literacy, and we've actually done that at CDIA. We had one of these roundtable discussions about a month ago or so on financial literacy, but I think I think you put your finger on something that's really important and quite missing in the U.S. educational system. And based upon my experience in this industry for a very long time, and maybe all three of you as well, is that there is a sorely lacking financial literacy training program available for people in the U.S., whether it's in the public schools. I don't have the best insight into what happens in private schools, and that varies probably widely. But there's a lot of financially less than financially literate adults who are in charge of educating their kids, who don't necessarily do the best job because they don't have the tools. And I don't necessarily think that our school systems are helping all that much either. Does that sound right to you guys?
It definitely does. And you know, something to consider too, for first generation college students, you know, maybe their parents, if you are a person whose parents had gone to school already and maybe even taken out loans to borrow and to cover their education costs, right? Maybe those folks would be able to say, well, you should be skeptical of this loan, or, you know, do take out a loan, but don't take out the full $5,500 this time around. Just take out whatever you need to cover the end of cost of your tuition, right? Speaking as someone who, I was a first generation college student and didn't really have that guidance, I was able to take out loans. I'm like, great, I've got a new computer and like Adobe and like software, and I'm like paying for it now. You know, it's like, so I think like it's something that could benefit folks, especially from underrepresented backgrounds who are first accessing their college education.
Yeah, I mean, I could spend a lot of time talking about this, but nobody wants to hear that necessarily. But the one and only case I ever litigated in my life was a pro bono case where a young man wound up leasing a car that he thought he was buying, and I think that the car dealer probably took advantage of him because of his financially inadequate knowledge base, and he wound up leasing a car that he thought he was buying. And there's a lot of other reasons as to why this kid was literally taken for a ride, and figuratively as well. But I think that there's a lot of I think we could all benefit from a little financial education in the school system, around the dinner table, and everywhere else for that matter. We only have just a couple of minutes left. So Chris, Claire, Regan, what haven't we discussed that you wanted to bring up, or what did we bring up that that you want to maybe amplify a little bit?
Yeah, I just want to say I think this was a really great discussion. I'm really glad we did this. I think one of the things that I try to do in my job and that I think is really important is to inform people both of ways to pay their student loans and financial strategies, but also to sort of shed a light on what people are facing, especially with the burden of student loans. And I think one thing we mentioned about people signing up for these loans when they're young, not knowing what they're getting into, maybe this is one way that we can prevent that from happening. It is that financial literacy part. So I'm really glad that, we have forums like this and that we're able to discuss it to hopefully, even if the policies can't change, at least people can go into the student loan process with a clear-minded view and more knowledge of how to best go about it.
Got it. Chris or Regan, anything else that you wanted to talk about?
Yeah, I would say, we've been talking a lot about younger borrowers here, but I just want to say that, the landscape of people who are paying off their student loans varies widely. And for things that you may not anticipate, right? I've talked with, a fair number of people who borrowed and had to drop out and they don't have a college degree, right? And one person went back to trade school and borrowed a little bit. He became an auto mechanic and is making a good living as that. But, he has student loans from when he did go to school. And so I guess what I would say is that the complexity or the nuance of who is a student loan borrower is more, I think it's more surprising than people might initially think. I think perhaps there is like a stereotypical image of a 32-year-old creative writing major, which is me, with like student loan debt. But, there's a huge spectrum of folks out there who are actively trying to figure out how to navigate these spaces. And that I would just add that to the conversation and something I try to bring to forward in my reporting whenever I can.
Got it. Anyone else? Regan, did you have something that you wanted to add?
Yeah, I just wanted to thank you, Eric and Chris and Claire. I really enjoyed the conversation, and especially how the conversation really centered the borrower. I think it's really, really important in all the work that we do, to put the borrower, in the middle, and how we can best, provide the best, program the services to the borrower and help them, repay their student loans so that they're not struggling economically. It's really looking at the whole economic situation for that borrower. It's not just a student loan is most likely not the only thing that they're trying to pay, loan that they're trying to pay off, not their only bill that they're paying every month when the program restarts. And that's why we at Pew and so many others who work in this field are looking at this every day and trying to improve the system, and why we look at issues like improving IDR, like improving the servicing system, and like reforming default, to make sure that borrowers, especially those who have struggled, who have other economic struggles, and that's why they're struggling with their student loans, can find a way out of that economic hole that they're in and improve their economic situation.
Chris, yep, please.
Sorry, if I just wanted to, I'd meant to say there that I saw that there were still some outstanding questions, and I love hearing from folks about this topic whenever possible. So I just wanted to say, if I could briefly pitch myself, you can find me on Twitter at Quintana DC, and I'm also very active on LinkedIn as well. If you all ever have questions or story pitches or just want to chat in any of those spaces.
That's great. Well, we really appreciate all of you being here. We in the consumer reporting industry are providers of accurate, reliable information. And of course, we mentioned before, as the Department of Education and FSA has been updating and evolving, we have evolved as well to make sure that we are meeting our accuracy obligations under federal law and providing reliable decisions upon which data lenders, creditors, and others can use fairly, appropriately, and legally. And it's also nice to bring together people with viewpoints that we don't necessarily always get to hear. So Chris, Claire, Regan, I really appreciate all of you spending the last hour with us. Thank you, all three of you, very much. And for the guests on the line today, I really appreciate you joining us as well, the participants and spectators all alike. And I wish you all a very safe, pleasant, and meaningful holiday season. Thank you all very much. Have a great day. Take care.
Thanks for having me.
Thank you, guys.